Welcome everyone. Welcome to another round of Connect with Experts around investing, portfolio management and advisory. Today we have a very special guest, Mr. Vivek Sharma, founding member of Team Gulaq, who has more than 17 years of experience around portfolio management, investment advisory and trading. So Vivek, very happy to have you on our Kotak Cherry platform for discussion around investing.
Thank you, Janak. Thank you for having us. Looking forward to the chat with you. The first and the biggest benefit that we as a company are able to provide is, as investors, there are different avenues to invest. One is obviously the mutual funds and the ETFs route. That is one. But because of this technology, what is now able to happen is investment advisors like us are able to provide our portfolios to the wider audience. And I'll tell you a few of the benefits. What are the benefits in these model portfolios? I've read a lot of research, and this research being done all over the world, be it in India, US, Europe, Japan, everywhere. And the result is same, that most of the investors who are trying to select stocks, they are unable to do that. So they are not even able to make those benchmark returns, right? Why does this happen? Because we have our own full-time jobs. Somebody is a software engineer, somebody is a doctor, somebody is into marketing field, and their expertise is not into stock picking. So how do they select stocks? Mostly what we do is we talk to friends, family, or we talk to anyone and everyone. We hear about one specific company is going to do well, right? So it's mostly based on tips that we are buying stocks, right? And that's why we actually underperform. We are not looking at the full, and even if you are researching on your own, there's only so much amount of time you have, right? You cannot look at the complete picture. So let's say you have developed a skill of looking at markets, you learn technical analysis, and you develop that skill. So based on technical analysis, you can see which stocks are good investments, right? But if you are only looking at technical analysis, you are ignoring the fundamental analysis, you are ignoring the macro theme, you are ignoring many other things. So as an investor, maybe we can develop one or two skills to pick stocks, but you'll never be able to look at the complete picture, right? And that's where we step in. So what we are doing is we have a team of over 100 employees who are into quant investing and technology field, and using them, they are researching in more than 6 geographies. And using them, we develop these portfolios, which are very, very well rounded. We look at more than 130 factors. So the point here being, portfolios like the ones that we offer, they are updated every month based on specific news related to stocks or sectors or Indian economy or even the global economy. We look at all of these factors and give you the best portfolio. And we update this portfolio on a monthly basis so that you as an investor don't need to do that research, and you can use these portfolios to invest and gain some edge over the benchmarks, as we'll talk about our performance, as we have been able to do over last 2.5 years or so. Okay, so let me talk about our portfolio, Gulaq Gear 6. So in Gulaq, we follow a gear-based approach, like we do in cars when we are driving cars, right? So if our destination is very far off and the road is very clear in front of me, I would like to drive at a much faster pace, maybe gear 5 or higher. Or if my destination is very nearby, right? Or if the road ahead is not very clear, let's say there's a lot of fog, then I might want to drive just in gear 1 or gear 2, something like that. And it also depends on my risk appetite. I might be a very aggressive driver. I like to drive in high speeds. I like to go faster, whereas some other driver might want to drive at a reasonably moderate speed, right? So based on that are our portfolio names. So overall, we have gear 1 to gear 6. That's the approach that we are following. And we have come out with this specific gear 6, which is our flagship portfolio. right? Which is meant for someone who wants to invest 100% into equities. So this specific portfolio has 100% allocation to equities. That is the first thing. And what are the advantages? As I have spoken earlier, this is purely a quantitative based approach. So the way it helps is it drives out all the human emotions that are there of fear and greed. So everyone goes through those emotions, not only investors, but even the fund managers. They are also humans and they go through all of those emotions. So the point here being that because our models are, we are making the models and these models are making these stock based selections, uh, the emotions that everyone else goes through, which many a times act negatively, we aren't undergoing those kind of emotions. So and you can see it in the performance also, that we have been able to beat in during bull markets, or even during last 1 year we have been able to beat the benchmarks convincingly uh, through our portfolio offering. What we do actually is, as I mentioned, we have 130 factors, two of which are momentum and value also. So see, the way we make our portfolios is why our portfolios are so much stable is because we select these factors also, because they are themes. Sometimes momentum might be working, but in bear markets, momentum gives you huge volatility and losses. At that time, maybe value works better or some other factor works better. So we are not tied up to one specific factor. We'll select our portfolios only on the basis of momentum or only on value, right? We keep on churning between these factors because these factors in itself keep on changing. For few months, momentum was working, but value was not working. But last couple of months, value has been giving good returns. Momentum has been suffering. So we are not fixated on one specific factor. We'll only select stocks based on momentum or value or growth, right? We figure out, and that's where our machine learning and AI capabilities come in. We try to figure out which kind of factors are likely to work in this current market scenario. So I think there are two thoughts. One, which I already discussed, is as retail investors, one should not go about selecting individual stocks because the odds are stacked against you. That is one thing, selecting individual stocks and even selecting themes. Now, with the advent of technology, uh, there's some good thing and some bad thing overall. So what has happened because of technology is there are many theme-based portfolios now in the market. A theme could be, let's say, Make in India theme or electric vehicles theme, right? So there are hundreds of theme-based portfolios, and one should not be investing in these specific theme-based portfolios because, again, the point being that they'll work for some time, but then again the flavor will change and then they won't work. So as investors, we won't have the tools to figure out when to enter a theme or when to exit a theme. So whenever you want to invest, you should invest in a broad based portfolio, something like mutual funds. Our portfolios work something like mutual funds, in which you can just invest and forget. You just need to rebalance it, but you don't need to keep on churning that right now I'm in gear 6, tomorrow I'll buy electric vehicle theme, or next day I'll buy some other theme which is working, might be agriculture or metals, because we take care of it. So whenever you are investing in a specific portfolio, those portfolios should be very broad based in terms of their stock selection.